Hi, it's Charlie giving you Wednesday's video. I hope you're very well. And I thought I'd just cover off yesterday's events with the pound and the pound pairs. It's not just cable, but pound generally did well yesterday. And so prior to yesterday, it was in this sort of range. Was always looking for it to come up to this daily 200 at least anyway. And obviously, as we can see here, it's blasted on through this. But it's days like this that there are traders all around the world losing money. And it's a natural thought process of newer traders to think a market has gone up a certain amount, so it must come back down. And so what happens is you get this sort of big move like this. So let's say prices come up like this, and then traders start thinking, well, I'm going to start shorting it. Oh, it's an easy short now. It must come back down. Maybe it's overbought on some indicators. And so they start shorting only for the market to go higher. They get either, if they are sensible and they're using stops, they just get stopped out, or lots of traders don't use stops and then it goes higher. They add in some more because they're thinking, all right, well, I'll better average in because then if it retraces for me, then it doesn't have to retrace as much, and then it goes sideways for a bit. So then they're starting to think at this point, phew, right, okay, it seems to have settled. Right, I'll add some more now because it's probably going to come down, and then Bush? Don't know if that's a technical word. Bosh probably is the word I was looking for. And then it goes higher again and then absolutely decimates them. And that's the sort of thing that happens in the markets all of the time. When you get these sorts of moves, traders all around the world will be going against it. Please don't go against the price momentum. The problem is that traders will get away with going against price momentum quite a bit of the time. And so a trader can actually go for months trading that way, and then enough of the time you get these big move days like this, and then a trader will get caught. And so it doesn't matter how many months you can go for doing quite well by going against the momentum and trying to pick tops and bottoms. But then at some point, especially this is mostly for traders who are not using stops, and there's a lot of traders out there who do that. Then at some point it's going to come and get you, and it doesn't matter how many months or a year or how long you've gone for making money. If ultimately that style is going to decimate your account, what's the point in doing it? It doesn't matter if you've turned your £10,000 account into £15,000. If ultimately you end up losing most of that 15,000, what was the point in doing it, sort of thing. So big news yesterday, and the reason why people lose is because of their own mindset. That's why. Why were people going against the market? It's because people have this natural feeling that once it's gone high enough, it can't go any higher and it must come back down. So when you see a move like this, you've got one or two choices. When it's a big move, especially on big news like that, then either try and find an entry to get in. Not always easy. When you already feel like it's already gone up a lot, it's not always easy to get in. Or just sit back and admire it. And there's always other markets to trade, and you can always then trade a secondary move. Just sit back and wait for the inevitable pullback, which may not come in on that particular day, but a couple of days later you'll usually find a pullback, and then there's an opportunity. But the problem is traders get wrapped up in the excitement here. One other thing, I was told yesterday about a trader who was risking 80 pips to make, I think it was something like 4 pips. I think that was it. And had made money for a long period, actually. So risking 80 pips to make 4 pips. Had made quite a bit of money, or was making money, should I say. And ultimately, of course, they were doomed to failure. You're risking 80 to make 4. But as you can imagine, if you're risking 80 to make 4, you're right a heck of a lot of the time. But ultimately, one thing is you don't sleep well at night because, basically he was risking 20% of his account to make 2%, something like that, I think it was, and on each trade. And so, as you can imagine, you only got to have one losing trade and you're down 20%. But I think the individual was making money regularly because they kept on winning, and they'd have the odd losing trade, but then the winners would very quickly all add up. But ultimately, the trader got decimated. So Again, another little rule there for you to always watch your risk reward, and when it's that drastically inverted, then at some point you will be wrong more than once. And once you're wrong twice, then all of a sudden you start to think, oh my god, now I'm down 40%. Do I take this next trade? And then you start to hesitate, and all those issues come in, and then either you stop trading the strategy, which means it was a pointless waste of time, or you carry on trading it, and at some point it will decimate your account because it will have those few losers. As the market dynamics change, the strategy will change, and then you're out. So anyway, just another word of warning there. Right, I shall leave that with you. See you on Friday for live trading.